In a high net worth divorce, it is important to ensure that both spouses leave with an equal share of the marital assets and liabilities. High net worth divorces are often more complicated because of the nature of those assets, whether it's rental properties, investment income, whether it's a business or two that's owned, whether there's multiple properties and LLCs and different LLCs. Those things will be carefully considered as part of the divorce process. If they are extraordinarily complicated and require an expert such as a forensic CPA to determine business valuations, to determine the fair share of rental income, then we can bring those in as well. A high net worth divorce is no different than a regular divorce. The ultimate goal is 50-50. There's just much more information and much more to consider, such as trust, LLCs, rental properties, investment opportunities. There are a lot of special considerations for dividing business assets in a high net worth divorce. First, we have to figure out what the business is actually worth. Just because it makes $1 million a year doesn't mean it's worth a 3x or a 5x. We also have to look at that goodwill value. If the person running the business, which is usually one of the spouses, not both, is out of the picture, does that business retain its value? If not, then that business could have very little value. The perfect example of a business where there is no goodwill value would be a McDonald's franchise. Whether you or your spouse are there or not, McDonald's is going to make money. The opposite of that would be something where the entire person's brand is the value. Without that individual person's brand, there is no value, or there could be less value. A middle ground example would be something where there's a person that's the face of the company, runs the company, but there are many employees and other contractors within the company that could run the company to some level, even if not the same level, without that primary person. The court is not looking to destroy your businesses. The court is not looking to force the sale of any businesses. The court just wants to ensure that both parties reap the benefit of any effort or investments made during the marriage. The division of real estate in Florida can be treated a little bit differently than what you may expect. If it is your primary home, there is a very straightforward formula. It's the net value. It is the value of the home minus the mortgage, if any, owed on that home. That is the net value. That home will be assigned that value and added to the equitable distribution chart. However, let's say it is an income generating property. For example, you and your spouse purchase a duplex. Then you have the rental income minus the mortgage, and that is the net income for that property every month. And don't forget other expenses too. But that creates an income source as well, which can be strategically assigned in the divorce to reduce someone else's income or to increase someone else's income. Depending on the revenue, the liability, and the asset's net value, it could be a very different determination for each kind of real estate. Forensic accountants can play a very important role. They are not appropriate for all cases, but they are a valuable tool that can be used in your divorce. For example, did your husband have a bunch of money in his checking account and it magically got sent to his brother to repay a loan that you never knew existed? We would bring in a forensic accountant to show that it's really just hiding an asset. What if it's a business and we need to determine the value? A forensic accountant can help determine that value. What if you have a claim that something is non-marital? I had this before the marriage, or I have a 401k with $1 million, but I don't think that's all marital. We can bring in a forensic accountant to determine what the marital share is versus what is the non-marital share. I had this in a case recently where my client was trying to protect his retirement account. The other side said it was all marital. The forensic accountant came in and looked at the deposits made before the marriage and looked at deposits during the marriage and the growth on those deposits. The end result was my client was fully awarded that account as 100% non-marital. Forensic accountants are expensive, but when used appropriately, they are worth every penny.